Hello and welcome to the Pipnotic Symposium for the 28th of December 2017. First of all, Merry Christmas to everybody. I hope you all had a lovely break and managed to spend some quality time with your families and friends. And Happy New Year in a couple of days. It's pretty exciting. It's always exciting when the New Year starts, the prospect of new things to come and fresh starts. So I always like those. I haven't been doing these this past couple of weeks due to family engagements. We've been pretty busy doing all sorts of stuff. So I thought I should squeeze a quick one in now between Christmas and New Year's. I've been receiving a couple of questions regarding the process of finding these decent areas to trade at, and also a request to have a look at the euro American dollar. So I'm going to start off by doing that, and then we'll move on to the other bit. Okay, so if we have a look at this, you can see a couple of things here. We cannot draw an upward sloping trend line, so we don't officially have an uptrend on the monthly chart, but what we do have is we have a downward sloping trend line. We can take this high, we can connect it to here, like so. We have a downward sloping trend line. The trend line has been broken. What does that mean? Well, that means that we have something in here that is, that is strong enough to cause price to no longer want to respect the trend line there. So this would lead us to believe that we have some demand down here at the bottom. If we have a closer look at that, you can actually see that we have a parent and we have a child just here. You can see that price came down, it rallied, it came down, it accumulated, and then it left. So we actually have two areas, and these are going to be a lot clearer on the weekly chart. But on the monthly chart, we're just going to mark them all off. We're just going to go from here to here. So once price starts moving back down to the 108 area, it's probably going to spend a couple of months there while liquidity starts filling these limit orders down here, and price will probably continue moving higher and rebalance this price inefficiency here. But we don't have that yet. So now we have a bearish consolidation, meaning that we had a downtrend and now the trend line is broken, but we cannot draw an upward sloping trend line until price moves above this swing high here. Then we can connect something down here to this here. It's going to be a bit of a steep trend line, but we'll be able to do that. And on the weekly chart, it's going to be a lot clearer. So you take this information with you. What does this mean? That means that we are in a downtrend, but we are having a bit of a break, and you can see we're having a very big break. And so despite the fact that according to the trend lines that we have kind of bearish consolidation, and if you look here, that makes pretty good sense. How we had price left parity, it returned, it rebalanced, it left, it rebalanced, it left, it almost came back, and it left, and it has not been back yet. And we have a few areas that we could look at in anticipation that the downtrend, you see the peaks are becoming lower and the swing lows are being taken out. We can expect that to continue. We have this lower probability area here, and we have the higher probability just up here at the top. So we take this information down with us, and what do we have here? We have a pretty strong uptrend. We have let's have a close look before we get ahead of ourselves. You can see that we have that parent that we talked about. Price came back down, we tested it. So actually we had a parent and one child, and here we have a parent, we have two children, parent, child, child. And then price rallied, accumulated, rallied, accumulated, rallied, accumulated, and then it started to slow down. And now it's kind of having a wriggle higher, and you can see that price really moved away from this area of monthly demand, which is currently in charge, currently driving price, and it really left in a hurry. And you can see this simply by the way price left. You can see the price had many continuation patterns on the way up to this high just here. The price never really pulled back. We didn't have price moving higher and having a really nice deep retracement, seeking the thicker liquidity in a nice area of demand, and then continuing high. We didn't see any of that. We saw price leaving very quickly and very forcefully. So the thinner side of the market was to the upside, the thicker side was to the downside. So if we have a look here, we have this low, we have a high, but price has not yet moved above this high, so we can't draw the upward sloping trend line. But what we can do, we look at some like bleeding edge swings. We look at this and this, we can draw in here, and you can see that we've actually broken the trend line. So we have this we had this downtrend here, this area of demand broke this this trend line. We managed to consume this supply here. This is supply because when price left here, we managed to consume all of the liquidity available in this kind of a messy demand just here. So this is interesting. Should price come back down here, we'll probably see some reactions. And now price is looking pretty strong. If price manages, if this area of supply or this one up here manages to hold and price starts to lower highs and lower lows move down into this, then I wouldn't touch this, because if market flow, traditional market flow, swings highs and swing lows, starts to move down, so we have supply being respected, demand being consumed by the sellers, then I wouldn't take this. Then I would look to this one here, because this is the only fresh one. Because once price starts to move against a move like this, well then you want to look for the fresh areas, and price has already been back to the low of this here. So from the low of this area of demand to this green line here, which is a buy order I have, when we have the buy zone in just here. So we have the buy zone starts here. This is very aggressive. This is normal buy zone, and this is conservative, and the stop would go just below the low of this accumulation candle just here. And so, I mean, you obviously want to be buying here. Ideally, we'd buy down here, but we have these decent areas of demand on the way out. I like this one here. I wouldn't be too comfortable about this for the reason that I just stated. If price starts to turn around and move down into this, it's likely going to move through this and seek the thick liquidity, which is going to be down here, down here, down here, and essentially down here at the bottom, which is actually the monthly demand that caused a price to move higher and away. We take that knowledge down with us on the smaller time frame, on the daily time frame. What can we do here? Well, you can see not quite a trend line, but you can see that we have some smaller swings here. Let's realign our weekly trend line. Like so. A little bit clearer. We actually have a trend line break here. I mean, you can look at all these and you can say, yeah, well, this is a high, this is a low, this is a lower high, this is a low, but this is messy. This is not, these aren't clear swings, these aren't really either. And so I wouldn't look at these two. What I would look at is this, from this low to this low. Those are clear swings. We have a low, another low, and when price left here, it went above here. This is a nice demand, moved above here, and we have this area of supply is responsible for this trend line to break. What does that mean? Well, that means that we can likely expect a reaction at this area here. What I don't like about trading here is that you can see that demand, we have fresh areas of demand that are being formed below price. So that tells me that price is going to go through this, and it's going to move up to, for example, this instead. So the 120-ish area. And to be more precise, you can see that price had a test up here at the 120.31. So this is fresh supply just here. I don't like so much that price poked up in here, so price has already been back to that area. So what you can do is you can mark off the high and delete this low one here. We'll zoom out, and then we're going to scroll left and see what it's reacting on. Yeah, you can hear in the background we're preparing for New Year's, and so the Danes go absolutely bananas, and so they're just warming up and testing out their rockets and fireworks. So you can see that this is what price tested, this kind of little drop. We had like some accumulation here, price released, price reacted here. Above that we have this, which is not a pretty area of supply, but we had a nice release, and so I think the price will have a bit of a bounce there. I mean, there's nothing really clear. This is lovely. We have this really nice release here, which is very far above price. We just do this whole area like that. And then you can see there's not a whole lot going on here. We have, yeah, this is just a nice breakaway here. We had this one here, which is gone. We had this one here, which has been tested here once. And then it's been taken out here, and now prices means turning around as we saw here. Let me go back to where, there we are. And so there we could potentially expect a reaction here, but you've got to be careful when price starts to do what it's doing now. It just shows us that we have demand forming below price, which I don't like very much. So this one is an absolute no-go. This is the weekly area of supply. This is the daily area. This is a little bit more conservative. Alternatively, you could go for the fresh. You could ask yourself the question. Let me zoom out to ask this question. This whole price structure, what leg is it standing on? It's standing on this one here. And so you want to look for the supply, the fresh supply on the way down. We have this area here that I marked off earlier, and we have something in here. We've got some in here as well. We've got this here, which is a nice area, reasonable area. We have something going on here, and so these are definitely the more interesting areas. These are not going to be really strong areas of supply because these are reactions to supply. I mean, we had the accumulation here, and it looks like that we were testing the lower perimeter of this area of supply, and we had a pullback. We had kind of market flow went down, we broke the trend line, so we attracted some buying. We formed this weekly demand here. Now price is turning around, so we're probably going to have a deeper poke. So we're probably going to go through this. We're going to move up into this kind of thicket of liquidity around here, I'd think. We don't really, it's not too pretty, but I think this one here, the 126.31, could provide some resistance for us. If you have a look at the dashboard here, there's a new version coming out early in the new year. I've done a few modifications. One of them is this one here, and this is the swap long, swap short. So if you're selling this, you're going to be paying €6 per standard lot per day to hold this position overnight. So ideally, so if you hold it long, so if you buy this, you're going to be paying €6 every day, and 3 times that on Wednesdays. But if you are short, so if you're selling, you're going to be earning almost $5 per standard lot per day. And so if you're holding big positions, it's ideally it's a good idea to be short the euro American dollar. But if you're trading intraday shorter term, then you don't really have to care so much about the swap, because you'll probably be out of the position before the day turns. And so for the time being, I think price could continue moving higher. I'd really like it to pull back to this. I like this one here, but I don't think it's going to, because we're probably going to move through this. We're going to start testing these highs here, and then I think the next area is going to be kind of in and around this area here. And I've got an order up here. We'll have to wait and see. I might adjust that depending on what price starts to look like when it starts to approach this area. If we have some really nice areas of demand forming below price, then I'll reassess this, and I'll wait and maybe push it up to this one here, or maybe to look to do something else. We'll have to see. And so I think for the time being, the euro American dollar is a buy at demand, and just be careful rather just be mindful of the fact that we are approaching these areas of supply pretty close to price just here. And you can see, I mean, this is a huge drop off just here. Matter of fact, if we put the intra candles indicator on here and have a look, okay, so you can see that we're monthly sell, and we had 2 monthly accumulation candles here, and then monthly sell. So for this, you could do, your entry could be something like that. This would be nice. It's a pretty big position. Yeah, 450 pips. But this would be one that you could hold for for quite a significant amount of time. We also have this price inefficiency which needs to be rebalanced. So if we get some kind of reaction here, I'm thinking we could follow it back down to this monthly demand, and then thereafter watch price wriggle higher and begin to rebalance this price inefficiency here. But we did have a really nice push lower, 2 months of accumulation, and then a selling, and so I think this is a pretty decent area to sell into once it gets up and around here. You can see we have these 2 accumulation candles just here. If you're unaware about this, you can see the tops of them are white, so this tells us that they are accumulation candles. If they are lime green, like this one here, or then they are price imbalance candles. So this one here, this one here, this one here. You can see on the supply and demand indicator we have the lime green and the white. So the tops of the intra candle indicator is telling us essentially the same thing. Yeah, so just keep that in mind. Okay, so let's have a look at, let me put on a clear template. Let's have a look at a good way to find these really nice areas. Okay, when ultimately you need to start on your trend time frame, which for me is the monthly. Sometimes I'll look at the weekly, sometimes the daily, depending, but I like to look at the higher time frames because I really want to know what's going on these bigger time frames, because this is ultimately what's driving price. On the euro, I know that we have monthly demand driving price. That means I want to be buying even on the shorter term, and so I'd like to keep that as my bias. So I want to be buying the euro American dollar for the time being, at least. And so you take this information with you to the smaller time frames. Then you want to look for the origin of a big move, so like a big swing. And if you look here, you can see that we have the most recent move is this one here. So this is the high. You look at current price and you go back, where did this move originate? Originated from here. So you put a line at the bottom here. You can ask yourself, has price been back to this area before? And then you can answer this question simply by looking left, and you can see just here the price has indeed been back to this area before. What does that tell us about trading this? Would it be a good idea to trade this area here? Well, the answer is no, and it's no because price has already been back to these levels. It's been back to the lows here, and so ideally you don't want to be paying a price any more expensive than the 117.13 for the euro American dollar, and you want to be looking for these price inefficiencies, so place areas in price where price is out of parity, it's moved away from parity, and you can see that it's done so here, and this is still out of balance. And for price to return to parity, it's going to have to move through this area of demand, which has been tested once, twice. We probably had divergence here and a nice buy. It's probably going to want to look for something down here. On a bigger time frame like the daily, this is probably going to look pretty nice and clear, and you can see it here where we have 2 accumulation candles right there, and this is located at the edge of this weekly demand. So price came down, we had divergence probably here, we poked into this demand, then price shot up, accumulated, and then went higher. And now price looks like it's maybe going to look for some bullish liquidity in order to continue moving higher. Where is that demand that's going to do that? Well, that's our job to find. So you want to find these areas, you want to find the highest probability an area that is highest probability, and those are going to be the ones, the areas that price has not been back to yet. So you look at current price, you look at the origin of that move, which is here, and you ask yourself the question: has price been back here before? It has. Where? Over here. Good. So that means that this is not demand. This is a reaction to demand. The demand being here. That means your entry wants to go below the low of this parent area here. So the buy zone starts here, and the optimal entry is here, and it goes down to the lows here. So this is the ideal entry to buy here at the 116, a 75-ish area. And so that's pretty much what you want to do. It's pretty simple. I mean, a lot of people really try to overcomplicate supply and demand, and it's actually not simple at all. Sorry, it's not simple. It's not complicated at all. It should be simple. You need to know what direction price is moving. You can look at supply and demand, or you can look at the currency strength tools that we have at our disposal, and you can use this information to give us a direction or bias, because this is key. If you don't know what direction you should be trading in, well, then you're going to be losing money pretty much all of the time. And so you need to know this. So go on the bigger time frames. If you're trading on the 30-minute chart or the 1 hour, go to the daily chart and say, okay, what direction is this moving in? Well, you can see we're moving higher, and we've had this origin. The origin of this move is here. We're challenging it. We're seeing demand being formed below price. We have this area of weekly supply that's being challenged, and so we're probably going to see a pullback and a move high. So you want to find out, let's go to a different pair. Let's take the pound. And so we'll go on the weekly. What's going on here? Well, price is wriggling higher. So we're expecting price to continue moving in this direction. The overall trend is down. The dashboard is red, meaning we want to be selling. Or rather, the smart money is short in relation to interest rate swaps. And so you can buy here. You want to be buying at the extremes and selling at the extremes. So I want to be selling in line with the interest rate swaps, so I want to be selling up here. And so, so you want to be, if you're shorter term, you can buy. It doesn't matter about this. If you're shorter term, you can buy. And so you just need to know this. So going on the weekly chart will tell you rather, okay, I can draw a trend line here. I can go like this. This looks pretty clear to me. Yeah, it looks like that. That's fine. We're going higher. Good. Go to the smaller time frames and find out where you want to buy. So you do that. Go to your entry time frame, and you look for that. We had a nice continuation pattern just here. How price rallied, accumulated, and rallied. When price left here, it went above this swing high. This is not supply. This is a reaction to supply. This is price seeking liquidity. But this little area of demand here was strong enough to move above this high. And now we are struggling with this. Actually, I took a short right here. Right here. Simply for a 1-to-1. I sold here, my stop was just above here, and I took a 1-to-1 down to here. Because I was expecting price to continue moving higher simply because of this. We had these the rectangles forming below price. That's a pretty good indication that price is going to continue moving in that direction. The price came down, we got a 2-to-1, maybe 2.5, and then price rallied, accumulated below it, and then cut through it. So this is the area of demand that consumed the supply that we were interested in selling at. So I sold here. This area of demand took it out. So you simply move this down to here, because this is the one that consumed it. So your entry is to buy at the 134.24. Your stop is just below this number. The position size is pretty huge, meaning we have 10 pips, so we have over 500 lots. So you might run into liquidity issues there, depending on the time of the day. And then you want to kind of follow it higher. We had a pretty good bounce, maybe a 1-to-2 already. So you might have been out of this trade already just here. So that's pretty much it. It's you really have to keep it simple. If you try to over analyze, then you'll find that you'll you'll never get into any trades. And so I recommend that you do, for example, this. So you go on a time frame that you like. We'll pick another pair once again. Dollar CAD. That's ugly. Let's go to the Aussie. So you go to a time frame that you like, and preferably one that's not looking. Let me look at find something else. Okay, like this. Okay, so you pick a time frame. This is fine. The reason I like this one better is because it's moving sideways a little bit. It's going up and down, up and down. It's out of balance, rebalancing, out of balance, rebalancing. And so you find these rectangles, and you can simply choose the rectangles that are the extremes. So if we zoom out a little bit, you can see we're going to have, when we have rectangles here that are closer, oops, sorry, they're closer to the extremes. The extreme, when I say extremes, I mean the highs. And so we have, this is the extremes, and these are getting close. You want to be in the top 25% of this if you're selling, and you want to be at the bottom 25% of this if you're buying. You want to be as close to the origin of the most recent move, rather this move here or this move here, because this is where these orders are going to be located. And so we have this area here. It's been tested once, went all the way, almost all the way through it. So there's probably fewer buyers there now than there was previously. But if you look now, you can see that price is reacting on this daily supply. Let's have a look at it. Yeah, pretty nice supply. Our price went up into this supply. We tested it and we left very quickly. This is a really nice supply. We had 3 periods. One, we had a really nice sell-off here. We took out these lows here. Price tested that nicely. There's a second test. We're having accumulation just below the area. And so price, let's have a look what's going on this time frame. Yeah, we're sideways, you know, so we're probably going to maybe challenge these highs again, then we're going to go back down to these lows. Then eventually price will move up, stick to a supply, and then cut through it, or move down, stick to a demand, and then cut through it. And so this is a range-bound market for the time being, so you need to be focusing on the extremes. You don't want to be buying or selling anywhere here in the middle. You want to be selling up here and buying down here. And so find something down in here that's interesting, and put an order on in there. Let's have a look where we are. So I mean, have a look at this one here. This is the extreme for this move. This is kind of at the bottom. So put an order on right there. On a demo account, risk 1%. And so you're risking 23 pips. And so take your profit at 23 pips. And do this for, let's say, 2 pairs. And so, and buying and selling. And so you can see here that we have this one here. This is a nice, like a nice extreme. This is the lower end of this curve here. So put an order in to buy there and just leave it and walk away. And do it on all of them. Don't get too picky initially. Wait to be picky until you have like a sample size of 50 trades, 50 to 100 trades. Then you go back and you drag them and you move them on the chart. And then you can see, okay, this one worked. Why did it work? And then you can do the analysis. Okay, this one didn't hold. Why didn't it hold? Okay, so we look at this. This is the origin of this move. It didn't work out. Why? Then you look left. Has price been back to this area before? Yes, it has. It has been here. And here, as a matter of fact, this one went all the way down here. What does that tell us? Well, that tells us that when price left, this whole structure here is standing on this leg right here. And price has been back as low as the low of this here. That means that liquidity has been cleared out roughly to the low of this. And so you don't want to be paying a price any more expensive than the low of this. And this stuff will start to make sense to you. So you'll see that, oh wow, this one didn't work. And so you'll say, okay, well that's interesting. It didn't work because, well, actually price had been back there before. And so the limit orders that were available at this area of accumulation were tested here 2 times, and the 3rd time price went through. and then it'll start to make sense. And you'll also notice the quality of these areas of accumulation. I mean, this is a nice one because you see how price gapped up. This is good. This is also very good because price left very quickly. We came by, we had some big wicks as price got close to this area of demand, and then they went up. We had another go, a big wick, and then price went up. So that tells us this is interesting. And then you'll start to notice the small nuances in the structure of these areas of supply and demand. And this is when the aha experiences are going to start happening. And so I really recommend that you do this. And so you do this on a couple of pairs. We'll pick another pair just for fun. So we'll pick the the Aussie yen. Come on. Okay, so now we have this here. So we have prices wriggling higher. We have the current move. Where's the origin of it? It's down here. So mark off the low. And ask yourself the question: has price been back here before? It hasn't. The price has not been back here before. And so this is close to a first test of this area down here. And so this might be an interesting area for us to trade. You see when price almost got to it the first time, we had a big reaction. So the second time we might get a bit of reaction as well. So if we move this down here, also close to the big figure, we're probably going to see some kind of a bounce as well on the upside there. And so put your orders in. If this had gone down here before, and then again, or then this would not be an area that you'd want to trade again. And so but you have to remember the price has been back down to this area, and so the buy zone starts at the low of this move here. But you can see that the buying really took off when price moved down into this area here. We also have interest rates drops on the side of the bulls here, and you can see that we have these solid bordered rectangles forming below price. We have this one, price left, price tested. This is a nice area because it consumed the supply. This is a nice area supply because when price left here, we managed to take out all of these lows and completely kind of finish everything off that was down in here. This cut through it. This is the origin of it. Price went up, we accumulated, we moved above, and now we're approaching this one here. And if you look at this, you can say, is this a nice area? This is a decent area because we had a smaller trend line break. We had low, high, low, high. You can't see it on the daily, but it's clearer on the smaller time frames. Price left. When price left here, it moved below this low. And then it kind of left. When price came back to this area, we had a tough time moving above here. Then we had some pretty big rejections, wicks to the upside, and then a nice push lower, moving through all of this. And so there's a high likelihood of this area of supply giving us a bit of a bounce. It's not perfect. Why? Because we have this here. And so this is the only reason I think this is a mediocre trade, is because we have kind of this going on here. Price has kind of been down, accumulating, gone down, been up, accumulating, move up, down, gone up again. And so price is kind of traded through like in and around this area. So ideally, you'd want to put something like this. Something close to that, because this is where this is where price has not been yet. Price has not been to the high of this high here. I'm not sure what's going on with the platform. It's thinking. It's late here. And so, this is not a perfect area for this reason. It's messy. Price has already traded through this area here. But this happened after this, which means that supply has entered the market since this happened here. And so that tells us this could be fresh supply, and so it's worth taking a stab at, hence the order there. But we'll have to watch and see what happens. I'm not sure what on earth is going on with my platform. Okay, sorry, two screens. one-click trading wasn't enabled. Now it is. We have a look at another pair. I don't know, Euro yen. What's going on here? Our price is pretty much range bound. You can see this area of demand has provided a lot of support for price, and we've had some pretty nice efficient trading. Our price goes down, rebounces, rebounces, rebounces. It's doing this a lot, so we're kind of stuck between the highs and this area of demand here. But it looks like that we're having a push and attempt to move higher. If we have a look up here, you can see that we're approaching this, and this is not something I'd want to sell into. None of this. I like price has already been back to this level here, and so I'd like to start looking to sell at supply around here. So this is something that I'll start to look at. So this is not interesting to me. I don't want to sell in here. I'd like to buy here if price comes back down there, or I want to start selling once price moves above here. So I'm going to be looking at areas of supply in here, or ultimately this nice little area just up here. If we're selling, we're earning a bit on the interest rate swaps as well every night, so that would be the smarter trade. And I'm trading on the monthly, weekly, and the daily, so I'm holding these for sometimes longer periods, so it gets really expensive if you kind of sit on these for ages. So anyway, but I'm not going to drag this one out. I hope it helped clarify a little bit of the process. And so you look at the current move, its origin, it's here. Has price been back there before? No, it hasn't. So what is it reacting on? Here we have it. There we have the demand right there. Price has not been there yet. This is a fresh area of demand. When price comes down there, take it, buy at the 107.80 area. The same thing applies here. We have an area here. This is the origin of this move. Price is returning to it, so we're getting close to it. Has price been back here too before? It hasn't. Good. Look for supply in here and sell them and sell into it. Pretty simple. It's pretty simple, and don't overcomplicate it. It's really easy to overcomplicate it. And if you're looking at secondary representations of price in the form of oscillators, then you're going to get yourself in a lot of trouble, because you're not focusing on price. You're focusing on secondary representations of price, and so your attention is drawn away what you need to focus on. Supply and demand is the only thing you need to study or understand in order to trade. You shouldn't care about anything else, or what anyone says about anything else, because it doesn't really matter. It's all supply and demand. So focus on supply and demand. And currency strength, which is our secondary tool, it's less important than supply and demand. But the thing that's good about currency strength is that it enables us to pair currencies that are diverging from each other. So you pair the strong one with the weak one, and this gives you a really high probability pair to trade, and you take the trades at supply and demand. Anyway, I'll stop rambling. It's getting late. I can hear I'm starting to stumble a little bit, but thank you all very much for watching this. If you have any questions, if there's anything you want me to go over, please shoot an email to me, and I will definitely get back to you. And have a lovely new year, and I look very much forward to chatting with you all in the new year. Thanks again.